How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for August 1st, 2017. Here is the report that I posted in the community, and here's a quick breakdown of the data that was posted on August 1st from the institutions and the hedge funds. And so let's get right into it. There we go. Let me just start this up like this. Alright. Okay, so what do we have here? Purple, brown, there we go. Alright, so gold. Let's take a look at gold. What we see in gold is that the institutions are starting to become slightly aggressive with their longs. We have an increase from 220 to 239,000, and that comes as we rallied right up into this area of resistance. Okay, so we have an area of resistance here. Price is reacting to the downside. It's also this 3-month trend line that we were testing up here and once again up here. So price reacted from this area of weekly supply, dropped into a tested area of weekly demand, rallied, and in so doing removing a supply zone here, and now we have new demand here. So institutions are getting aggressive with their longs. They've been reducing their shorts over the last few weeks, which is, which explains the move to the upside, because if you see here, the longs being added to these last couple of weeks weren't aggressive, but they were aggressively closing their shorts. So aggressively closing shorts causes prices to rally. Now they're starting to get aggressive with their longs. Some profit taking at these highs. We probably get a drop. Don't know how far of a drop, but if we get drops down here, I'll be looking to take confirmation trades to the upside. Otherwise, I'm not taking any trades long until this area gets taken out or we get a drop down here. So net positions is a positive 129,000, which is pretty high, pretty aggressive. But if you take a look here, we just came out of a bearish territory, so now we're in neutral territory. So now's not the time to take any trades to the long side. Alright, so let's take a look at oil. What do we see? Big increase in longs from 659,000 to 717,000 in positions, and now we have this big jump in long exposure, 2 points from 74% to 76%, and this happens with this big green candle here. So a lot of demand kicking in. All right, so that's what, 60, 17, 18,000 long positions originating from this area here. So price comes up, we got a doji candle. What I'm waiting for is the break of this weekly trend line, and if we come back down to this area, I'll take longs here any day, like that, because we know that net positions are huge, positive 486,000. all right, the bias is slightly more bullish than it was last week, with the cells turning slightly green, but we can see that the institutions are heavily long oil. We're reacting from a non-2-to-1 monthly demand zone. We got a monthly bullish engulfing here. Price is going to go up like this. So I'm just waiting for this weekly trend line to get out of the way, because we don't know how much of a drop we're going to receive from this reaction from the trend line. So once we break to the upside, I'll be looking for trades to take this to the long side. Alright, so let's go to the next one. We have the US dollar. US dollar has been dropping pretty significantly. We have the institutions now net negative, with short positions being 51% of their overall exposure. Shorts are aggressive, longs are cooled off. Alright, so this is all indications that price is going to go lower. We are overextended on the weekly chart, so price can pretty much rally all the way back up here if it wants to, but and it actually is very possible, since they don't have that large of a short position right now. Yes, shorts are above average size, and longs are below average size, but I mean, take a look at these numbers, 49 and 51%. Those are not big numbers, especially when we are thinking that price is going to drop down here. Let's take a look here. I am under the belief that price is going to drop right down here. Boom, 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 right down here. Shoop, right here. To the 86s. So, what kind of a reaction are we going to get here? Possibly to this 20 EMA and then drop. There are some weekly supply zones there that I would be looking to take confirmation trades to the downside. Okay, so that's what I see. And so yeah, based on the positions, definitely an opportunity for us to see a move up here, one of these zones. I think I wrote on the charts 3K short from here, so they added 3K shorts. Up here is the bigger, is the more powerful move right here. So price could potentially rally up here, react to the downside, rally up a little higher, hit the trend line, and drop. So we'll see. I'll be monitoring this chart very closely and waiting for the right opportunity to take a trade. Alright, let's get to the next one. The Aussie. So the Aussie is reacting from that monthly demand zone that we had drawn out. Big move to the upside, creating a trend line. 2 green candles on the monthly usually means when we get a drop, we should be looking for entries on the weekly. So I'm looking for a move down here to get in long down this area. Longs are aggressive with an increase of 5,000 positions. Shorts aren't even moving. Okay, so they haven't been closing off shorts. Why? Well, because if they're expecting a move down, why would they close shorts? They want their short positions open, right? So long exposure increases by 1 point, and net positions increase from positive 56,000 to positive 60,000. So the bias is definitely bullish here. Just looking for a nice pullback to get in this one. Down here, this area here is the perfect area. 14,000 positions were added down here. So price gets down here, I'm expecting them to fill in the rest of their orders and bring this up here to bring their long exposure up above the 90s for the bigger move up here. Alright, let's take a look here. I want to see something on the monthly chart. So, yeah, a move up here, a move like this is very likely, like that. So that's a huge move to the upside. Alright, so let me just clear out my chart. Alright, so let's go to the next one, the US CAD. So this one's a little bit more of a difficult chart because we have some consolidation happening now, a monthly downtrend technically, but we have this 3-month area of demand that is in control, and it removed its 6-month supply zone, so it's extremely powerful. We got the first test here, now we got a second test here, a little bit deeper than the first, and I believe we're going to get a move to the upside like that, and we're going to test this trend line area. So if you take a look at the positions, shorts are the most aggressive, but that would explain this whole move down. It's been 1, 2, 3, 4, 5 straight weeks of price dropping, so of course we would expect it to be aggressive. Bias is bearish, obviously, but now we got a nice weekly bullish engulfing, which tells me that we're going to get price to at least here, or even higher, or even higher. So I'm looking for counter trend longs right now, just waiting for the right opportunities to get in. There's a setup that's setting up right now. It just needs a few more days to set up properly. But although short-term bias is shorts, I'm thinking that this one's gonna head up there. All right, so U.S. Swiss franc. What do we have here? We have the Swiss franc reacting off of a monthly demand zone. Same with the U.S. dollar hitting that tested demand zone. I think we're going to get a move in price to the upside here. And if you take a look here, longs closed off pretty significantly from 16,000 to 12,000 with this candle here. And shorts just closed off just very slightly. All right, the bias is slightly bearish. Net positions negative 1.4 thousand, which is not anything special to make any decisions on. So I'm not making any trading decisions on this chart right now. All right, so let's take a look at the euro. The euro, this one's a very interesting one. It's pretty much the exact opposite of the US dollar, in that I believe longer term we're going to see a move to up here, $1.29. But shorter term, you know, this is pretty aggressive. We've had 1, 2, 3, 4 green candles straight upwards. A nice retracement can happen. This can happen all the way down here, or this can happen down here for a move to the upside. I don't know which one it's going to be, so we'll have to wait for confirmation from any one of those levels to see which direction the institutions want to take trades. So let's take a look here with this candle here rallying straight into that weekly supply zone that we were watching and waiting for a reaction to the downside from. We had longs being closed out and shorts remaining. Why are shorts remaining for 3 weeks straight while the longs get closed out? Well, profit taking on longs, shorts remain because they're expecting a move to the downside. All right, so long exposure sits at 64%, and over the last couple weeks, net positions have dropped 91,000, 88, 82,000. So closing off longs for profit taking, ready for the move downwards to eventually get back in long. All right. Next chart is the pound. And what do we see with the pound? The pound's just been grinding away at this weekly formed monthly supply zone. Longs are aggressive. They've increased from 52,000 to 58,000. Short positions increased by 10,000. So why are longs and shorts increasing? For a move down, right? So if the US dollar rallies up into that weekly supply zone, this can easily drop into this weekly demand zone. With the trend line confluence, take longs to attack the monthly supply zone again. We are reacting from a monthly 20 EMA, but a 3-month demand zone is in control. So reaction from monthly 20 EMA, drop down to a weekly demand zone, longs. So it makes sense. We see some hedging from the institutions here. You see some hedging. So a move to the downside is what I'm expecting to see. US dollar, Japanese yen, longs are aggressive. Shorts are cooled off. Long exposure dropped by 4 points, but net position is still very positive. And we're sitting within weekly demand. Just like the US dollar's reacting from tested demand, I think we're going to see a push to the upside like this. Alright, the Kiwi dollar is the last one. We tested one time. The monthly supply nested within 3-month supply. We're testing for a second time a little bit deeper. A reaction to the downside is what I'm expecting. Longs are aggressive. Shorts are cooled off. The bias is extremely bullish, but that would explain why we had price come all the way up here. Net positions are positive, but like I said, we can't ignore the fact that there's a 3-month supply zone in control that removed a 6-month demand zone. So there's no breaking through this zone. It's just not going to happen. Price is going to have to react to the downside. And I think longer term we're going to see a bigger move to the downside. In fact, let's take a look at this chart. Excuse me. So yeah, so here's the 3-month supply. tested one time here. We got a deeper penetration here. Ascending trend line. And if you take a look here, we're bouncing from nothing. We broke this area here. So this area caused the removal of a 6-month demand zone. This area is nothing. So broke through the 6-month, retraced to the zone, double hit. I think this move to the upside was timed with the US dollar dropping. So if this drops and the US dollar hits that weekly supply zone, this is going to be a key spot to see what happens here. Because once that US dollar hits a weekly supply zone, I'm expecting it to drop. So technically this would have a force to go higher. So I'm waiting to see what happens. Bottom line is, once price gets down here, if this trend line breaks, we're going to see a nice drop in price to that. But I'll wait and see what happens. I want to see what the institutions are doing with their positions. Right now they are bullish, but I'm not going long, especially when the 3-month supply is in control, so I'm not doing anything on this chart. Alright, so that's pretty much it. On Wednesday we have the New Zealand rate release coming out, so that's pretty much the only piece of news that will move the markets. And that's pretty much it for now. So hope you guys have a good trading week, and we'll see you around.